So I don't normally do 2 videos in one day, but here we go. We've got some breaking news with Tattoo Chef that has just come out a couple of hours ago, and I'm going to talk about that. And as well as that, I did bring a video out earlier which was talking about Zoom, so do check that out. It did do absolutely terrible, and that is also why we're doing another video. So go check that one out if you haven't. But let's get stuck on today's video, or the second video of today, which is about Tattoo Chef that has just brought out some breaking news. The news has been received very positively. It is up 14% after this news came out. However, it has been a rough couple of months for Tattoo Chef. As you can see here, it's down 49% in the last 6 months. But getting on Tattoo Chef, this is what it brought out. There's a few bits of information here, so we're going to take a look at it. So it comes out with Tattoo Chef expands nationwide retail product distribution, and it also announces an acquisition of certain assets from Desert Premium Group and signs a lease agreement to increase manufacturing capacity. So I'm automatically thinking the reason why they've done the acquisition for these assets and increasing the manufacturing is to support this new distribution they have won. Now, if you guys do check out the conference calls, and it's always really important that when you invest into a business, you do research on a business and you listen to the conference calls, because in them conference calls you will hear some gems, and those gems can be very important. If you are someone that just stares at numbers, you will not understand the business, you will not understand what the business is trying to achieve, you won't understand the long-term aims, and there'll be some little snippets what the company are really excited about in the future. And if you did listen to Tattoo Chef's conference call, you would have seen that this is not a surprise. If you go through the transcript that we have here, you'll see here that there was a question from Matt Williams in the last conference call that talked about how are you expecting to have very good growth in the back end of the year. And the CEO and founder Sam Galletti came out with this response, which was, and then we have built in a very significant new distribution agreement with the largest retailer in the US from a retail perspective. So we haven't announced that kind to the market, a bit of a spelling error there, but it is taking our distribution to more than national distribution, so we will be nationally distributed at this retailer. And so that is built into our forecast for the second half of the year, and those 3 things are what are going to be driving the step up in revenue. So yeah, we had a little bit of hints, dropped this in the last earnings call. So when we have a look here, you'll see here that they announced that they have expanded the distribution agreement with Walmart. That will increase the availability of Tattoo Chef branded products at Walmart stores across the United States. The company also announced this simultaneous signing of closing of asset purchase agreement with the Desert Premium Group. Under the agreement with Walmart, Tattoo Chef will increase the brand's frozen shelf presence from 5 to 13 SKUs, so that's over double increase in the amount of SKUs that are going to be on shelves in Walmart, which is absolutely fantastic, and expand the availability of these 13 SKUs from an average of 300 Walmart stores to an average of 2,000. So that is a massive step up in the amount of stores that they're going to be in through Walmart, and that's absolutely fantastic. Initial availability of Tattoo Chef products at these new Walmart locations is expected no later than October 2022. So that suggests that we will start to see some of them numbers potentially creep into Q3, but especially in Q4 we should see a lot of them numbers really supporting them earnings back in the end of Q4, which is great. This is a massive expansion of SKUs, and not only SKUs, the locations are massive expansions as well. And the great thing about this is that it's the Tattoo Chef brand as well. The Tattoo Chef brand is the most important part to this business, not the private label, the Tattoo Chef brand, because that is what's going to drive the growth for the business going forward, and also will command better margins. One of the big issues that we have with this business at the moment is the margins are so poor. But when it's a branded product like the TTCF brand, that will bring better margins. Better margins will lead to more profitability, and this is the key for Tattoo Chef to get to profitability next year. They have to be shifting more and more of their branded products, and hopefully this deal does it. Now, the key thing with Tattoo Chef and Walmart is that Walmart is a major location, and as well as being a major location is that they've already been in 300 of their stores. So the fact that Walmart haven't just gone from 300 all the way up to 2,000 is a very positive sign. That's not even a slow, steady increase, and to increase the amount of stores by that much is amazing. Now, that also means that if Walmart are willing to kind of increase the SKUs and increase the locations by that much, that quickly, they must be very happy with the brand, and they must be very impressed with what's going on there. Now, at the moment, it hasn't translated to sales that much, which has been a bit frustrating to shareholders. But if one of the biggest retailers out there in the US are willing to do this, that is a really positive sign. They'll have a lot more data than what we can see. So that is great from a margins point of view, and also a bit of a confidence point of view, which I think Tattoo Chef shareholders have pretty much needed at the moment. Now, just to go into this other little part of what was announced in here, so they announced the signing of a company to acquire certain assets from the Desert Premium Group for approximately 10 million. That's probably one reason as well why they increased the debt and support this deal. You know, to go from 300 stores to 2,000 is quite a big jump. And the signing of a lease agreement for 80,000 square foot manufacturing facility as well. And it's also important to say that these assets as well are already located at that facility they're currently what they're currently leasing as well. So a bit interesting that they've acquired the assets at the facility, but they're still leasing the facility. I would love to know a bit more detail in there that isn't in here. For example, how long that lease is going to be. Is this a long-term partnership if you acquire the assets? I would think so. How much is that lease facility? There's not them details in here, but that'd be good to kind of know what's going on in here. But obviously this was agreement of the August the 19th, so clearly when they got the confirmation all signed with Walmart, then they quickly went, well, if we're going to support this, we're going to need to have this facility here. So that's probably why it's being done. But it'd be good to kind of know a few more financial details in there, and what is the total agreements of the cost, for example, how long the lease hold is going to be on this facility. But yeah, overall you can kind of understand why they've done that action right there. Now with Tattoo Chef, it has been a bit of an underwhelming time as a shareholder. The last 12 months have certainly been disappointed, and we are looking for positive things for this company to start doing to get improving their margins, get back to profitability, and also hold up more growth. We want to see TTCF pushing towards that 30% revenue growth ideally. And one of the biggest criticisms that I personally have of TTCF is that very much like now, we have announced these new stores, and previously we have seen new stores announced, which you can see here. They expanded their retail presence by 240%. That was a store count increase since the start of 2021. However, that hasn't translated into revenue. So we've seen previous store wins before, and that hasn't translated into revenue. If we go off the recent earnings, you can see here we only achieved 15% revenue growth, which was a really big miss, and we're hoping for more proof of this in the financials. And going on to the financials that is expected, you can see here the current quarter is going to be 14%, but they are expecting, analysts, 50% jump. That's a massive jump in Q4, but obviously that's because they're expecting a lot of that Walmart deal to be factored in, and they would have to do that to achieve the financial targets of 31% growth for this year. So overall, my thoughts on this situation is it looks like a really good deal. It looks like it's a good confidence boost that Walmart are expanding so many SKUs and so many stores. But it is important that TTCF do deliver on this, because we've seen it before. We've seen it before where it had increased stores, and that's not translated into company performance. So that is really key that we see that, and obviously you can see this is what analysts are expecting them to do. Now I am going to say this: if TTCF do achieve 14% growth and 49% growth in Q4, and they do achieve 31% at the back end of the year, I will actually be very, very impressed with this business, because one of the big things that I've been criticising this business of is getting that growth back up, and they would be achieving that towards the back end of the year. And also, if they can carry on expanding this TTCF brand and have better gross margins, that also gets rid of the poor gross margins that they've had at the moment, which also will be hopefully resolved with a few of the things they're doing inside the business as well. So this is hopefully a key turning point in TTCF, because it's been a very poor 12 months, but hopefully this deal is a key driver now where the financials improve, and then we get a bit more confidence. Because personally for me, as someone that does own a few shares in this business, I've got to see improvement, which it hasn't been doing in the last 12 months, and hopefully this is a key turnaround for this business. So we've got something to look forward to here, and there's a bit of excitement back in the business. So yeah, something to keep an eye on, especially going into Q4, and we'll see if they can deliver on this partnership. So hope you enjoyed a little mini update into TTCF, guys, and I'll see you on tomorrow. I'm going to talk about a bit about Boohoo then, so I'll see you then.